Alrighty. Well, hello everyone. First of all, happy Tuesday. And my name is Luke, and I'm a business advisor here at Collective. And we are essentially an all-in-one solution for a small business owner. We're an all-in-one business formation, um, bookkeeping, payroll, and tax solution. And essentially, we're an all-in-one solution for an S corp, or someone that needs to be an S corp. But today we have a little event that we like to call Tax Tuesday, and it's an AMA. It's an Ask Me Anything session, and you can ask me anything about taxes, about best business practices, best business financial practices, and things like that. But before we get into keep in mind that this is just information. Don't think of this as like official tax advice or legal advice or anything like that. So before you do anything, based on this information, speak to a CPA, speak to a tax attorney, or some sort of tax professional. Um, but with that being said, let's go ahead and get started on answering questions. The first question, which I think I'll be a little bit useless in, is what do you think about Picoin? Well, to be honest with you, I don't know much about cryptocurrency. I wish I did. A lot of people have gotten rich off of it. I wish that was me, um, but no such luck. So I'm sorry, I can't really give you an opinion because I don't really know what it is, to be honest with you. You okay? Here's a good question. You said Collective was an S corp company. What's an S corp? And essentially, first off, there's a lot of people that have kind of the wrong idea about what an S corp is. They think that it's a business. They think that it's a business entity, or some sort of business structure. Um, Understandably, they think it's a corporation a lot of times, but it's not. It's a tax election. So it's a way to ask the IRS to tax your business entity in a certain way. So when you, for example, set up an LLC, all of your business profits are taxed in the same way as if you were a sole proprietorship, as if you didn't have any sort of business entity set up. And really, what that means, especially in the context of an S corp, when you're a sole proprietorship or an LLC, you pay the maximum amount in self-employment tax. And that's why self-employed people pay so much in taxes, is that additional self-employment tax. And it's a flat tax rate of 15.3%. So before you make an S corp election, a huge chunk, or all of your net income is subject to that tax rate. So let's assume that your business is netting, and when I say netting, I mean after expenses. After you write off your home office deduction, other sort of mileage, just other expenses that you can write off. But you have your net income, and let's assume that someone has $100,000 in net income before you become an S corp. Like when you're just a sole prop or an LLC, how you calculate your self-employment tax is you take 100 grand and you'd multiply it by 15.3%. All of your money is subject to it. But what happens with an S corp election? And that's paperwork filed with the feds, by the way. It's filed with the IRS. But what happens is technically it creates an employee-employer relationship between you and your business. Long story short, you become an employee of your own LLC, or of your own business. And since you're an employee, your business will pay you a salary. It'll pay you a wage, just like you make and receive if you work for someone else, like as an employee. But the advantageous thing about S corps is that the only chunk of your earnings that are subject to the self-employment tax is your salary. So let's just assume, like I said earlier, let's assume that someone is netting, around 100 grand. And let's also assume with the S corp that they're paying themselves around like $40,000, something like that. Let's just assume that that's a reasonable salary for this hypothetical make believe person. That first 40 grand is still subject to the self employment tax, the 15.3%. The other 60 grand, or just the rest of your money, outside of your salary, those are considered distributions to yourself. And kind of conceptually speaking, you can kind of think of that money as dividends almost. Some people will use that term. But long story short, that chunk of your earnings is no longer subject to the self-employment tax. So, for someone making around $60,000, I believe, or I'm sorry, $100,000, I believe those savings, they come here, the S Corp saves you anywhere between $9,000 and $10,000. So, once you reach a certain income level, the S Corp can become rather, advantageous for your finances. What's the difference between an LLC and S Corp? Why were these differences created? Well, essentially, the difference is kind of what I just mentioned. Is you pay a lesser amount in self-employment tax when you're an S corp versus when you're just a sole proprietorship or an LLC. That's the big one. And the reason why it was created is it's just part of the tax code, that Congress chose to enact. And in my opinion, the reason why I think it did is that when when people left their W 2 job or when they quit their W 2 job, then a lot of them started their own businesses. They created their own LLC, started their own consultancies, and they started making good money. But they realized that they were paying more, they were making the same amount of money as when they were self employed compared to when they were W 2 employees. And they were paying a lot more in taxes, which didn't really make a lot of sense. Like it didn't seem fair. Why do I have more responsibilities, a harder time, but I also have to pay more in taxes than when I was a W 2 employee? So they lobbied Congress. They explained this to Congress, and the concept of the S corp election was enacted into tax law, which just allows people to reduce their tax. Why doesn't everyone become an S corp? Well, for one, S corps are a little bit more complicated than just being a sole proprietorship or an LLC. You have to run payroll. You have to track a balance sheet and your accounting. You have to file a business, S corp tax return, which is a pretty complicated return. So really, the main reason why someone wouldn't want to become an S corp is if they weren't making enough money or weren't saving enough in the self-employment tax to justify the additional administrative costs for that S corp. So, for example, like for one, when you become an S corp, you need to have a cost like collective, which handles the whole shebang for you, which handles the payroll, the accounting, the tax filing. Um, but you have there's a usually outside of collective. Let's say that you were just um, kind of YOLOing it and doing it by yourself, which I would not recommend, by the way. But you would need some sort of payroll processor, and that's usually $60 a month, something like that. You'd need some sort of accounting software, which is usually another $50 a month. And then at the end of the year, you need to find someone to file your S corp tax return, you know, which is a pretty complicated return. And someone could charge like a thousand, excuse me, $1,000, $2,000 for a return like that. So it's it, in long story short, those things cost money, all of them together. So if you're not saving enough money with the S corp to justify those costs, then what's the point of going the S corp route? Well, this is an interesting question. How long can you get away with tax evasion? Well, first of all, I would not recommend tax evasion. Do not commit tax evasion. It's not worth it. For one, it's illegal, and two, it's just they will definitely catch you. Like if you're evading, straight up evading on taxes, they will catch you. It's not a good idea. What are interesting question. What are two mistakes you can make paying yourself through an S corp? Ooh. Well, okay, well, I'll give three mistakes. One, paying yourself too little. You know, as the IRS would say, paying yourself an unreasonable salary. Because what the IRS says about the salary is um, is that it has to be reasonable. Sorry, I blanked there for a second. Is that it has to be a reasonable salary? Because people will ask me, well, if I'm only subject to the self-employment tax on my salary, then why not just pay myself like $1 in salary, you know, um, or something really low? And I have to explain that you probably get audited. You know, it's the IRS just says that it has to be reasonable. So one mistake is paying yourself too low of a salary. That might raise a flag for the IRS. But also the other mistake is paying yourself too much in salary. You know, it's a good idea to not make the IRS mad and be conservative and be reasonable and of course. But sometimes there's some people that pay themselves way too much in salary, and it might keep the IRS happy, but you're not saving much in taxes because of the S corp benefit. So it's kind of your salary is a tax strategy, the amount of it. It's got to be a balance between, paying, being low enough to where you pay less in the self-employment tax, but not being so low that that the IRS would consider it an unreasonable salary. So it's usually a good idea to have a tax professional or a company like Collective help you choose a salary amount for the S corp. Oh, and a third mistake is there are some people that when they're running payroll, when they're paying themselves a paycheck for the S corp, they'll wait until the end of the year and run, one big payroll. That is, don't get me wrong, that is probably better than nothing. That's probably better than not running payroll at all with an S corp. But still, it's a good idea to do it more orderly, you know, to pay yourself just like you would in frequency wise, just like you would if you worked for somebody else. Because let's say that if you ever were in an audit or they ever did inquire about your salary amount or anything like that, then it just looks more reasonable, it just looks more proper and structured, and it just looks like you put some time into thinking about the um, the uh, the process of your salary, which looks better in an examination. Can a partnership become an S corp? Yes, a partnership can become an S corp. And really, a partnership, all that is when two or more people are members of an LLC. That's what a partnership is. And it's automatically considered a partnership for tax purposes with the IRS when you form a partnership. So, let's say that you did that. Let's say that you formed a multi-member LLC, which again is, just a partnership. Before you make an S corp election, you have to file a partnership return with the IRS. It's called Form 1065. Um, so you're automatically considered a partnership. But then you can file an S corp election, and that is done on Form 2553. Is how that's done. But essentially, now that you have to file an S corp tax return, that's called an 1120S. So it just kind of depends on how you want to be taxed. Kind of the same concepts apply to a partnership as to an LLP. If you're not making enough money, sometimes it's just better to remain a partnership than not go the S corp route. But if the partnership is making enough money to where the savings and self-employment tax would justify an S corp, then you might want to go that route. Okay. What's the difference between a C corp and an S corp? It's a good question. Well, just like how when you create a multi-member LLC, you're considered a partnership in the IRS's eyes. When you create a corporation, like with your state Secretary of State's office, then obviously the IRS automatically considers you a C corporation for tax purposes. And there is a C corporation income tax return, like the whole 9 yards, the whole shebang, unless you make an S corp election on that C corp. And then you become an S corp in the IRS's eyes, like you become taxed as an S corporation. So that's the difference. Is a C corp is automatically taxed as a corporation, which has double taxation, which is taxed at the corporate level as a corporate income tax, and then it's also taxed when profits are sort of given to the investors or shareholders in the form of dividend at the shareholder level, at the form of dividends, in the form of W-2 paychecks, for the employees of the corporation. That's taxed, the self-employment tax, which is the Social Security and Medicare tax. So there's a lot of levels of taxation in the corporate structure, to be honest. And kind of how you get rid of all those levels of taxation is you make an S corp election. Not only does it reduce the self-employment tax, but it also reduces or eliminates the C corporation income tax that you have if you were a corporation. If you set up an LLC, that doesn't exist anyway. But if you set up a corporation, your corporation is automatically subject to corporate income tax. But making an S corp election gets rid of all of that. Is it possible to fall out of S corp status? Well, it is possible for the IRS to revoke your S corp status. It is, but really, you remain an S corp until you end it. So, for example, let's say that you make an S corp election, it exists in perpetuity. So until you send in some sort of formal statement to the IRS or follow the proper procedures to end an S corp election or to revoke it, then it exists. It exists, and it'll exist for years until you get rid of it. And how you get rid of it is when you go to file your S corp tax return, there's a checkbox to where you can mark final return, and you mark that, and you send in a statement that you're revoking your S corp election and give a reason, and usually that ends it. And then you'd usually want to shut down the underlying. It kind of depends, but you typically want to shut down the underlying entity too, your corporation or your LLC with the state. What happens if I form an S corp, but after a few years move out of the country? Well, it probably still exists in perpetuity until you shut it down, because usually the IRS doesn't know. Like if you have a life event, you have to let the IRS know. They won't automatically know. So you'd want to file a final S corp tax return and shut it down. Are there any reasons why you'd want to be a C corp over an S corp? Sure, there are. And for one, keep in mind that with an S corp, there are a few restrictions on what you can and can't do. And one is you can only have up to 100 owners in your business. You can only have up to 100 shareholders when you have an S corp election. So that's really important to consider. And you also you have to be a permanent U.S. resident or considered to be one before you can be a shareholder in an S corp. So that's something else to consider. Um, so let's say that sometimes let's say that you want to fundraise for your business, or you want to have more than 100 owners in it, more than 100 shareholders. Sometimes it's better to go with a C corp structure. So just keep that in mind when you're setting up your business entity. Can you still have a self-employed retirement account with the S corp? Yes, you can. And what's interesting about it is when you're self-employed, you can actually expand the sort of capability to save for retirement. And um, before, and again, these are very general numbers. Like I'm not, a retirement expert, so keep this in mind. But before, with a certain type of retirement account as an employee, you can usually only save up to around the $20,000 mark. I think a little bit more, maybe a couple grand more. But when you're an S corp or when you're self-employed, you can save up to that limit, up to that $20,000. But the S corp itself can dump money on top of that and exceed that individual employee limit. So, and I've seen certain situations where people are saving up to like $60,000 in tax-free retirement money. So it's a good deal. All right, I think we have another question coming through. Do you have to have a board of directors when you have an S corp? Sorry, guys, I've got the coughs today. Well, it depends, and you're only required to have a board of directors if you have a corporation kind of as the underpinning entity of your S corp. So, like, if you have a C corp that has made an S corp election, then you have a board of directors requirements. You have other corporate record keeping requirements and things like that. But you don't have those requirements if you have an LLC with an S corp election. An LLC doesn't have any sort of board of directors requirements. You don't have to keep up with board meeting minutes, corporate records, anything like that. So yeah, it doesn't have anything to do with the S corp. Like the S corp doesn't sort of, I guess, spring up those requirements into existence. It has to do with whether or not you have a corporation or an LLC. Really good question. Oh, okay. Here's a good question. What happens if I regret becoming an S corp? Can I dissolve it? Yes, you can. You can, and really, some people regret becoming an S corp because they don't want to deal with the additional administrative burden or anything like that. Um, if it saves you money, though, a company like Collective makes it really easy. So really, you're just kind of throwing money down the drain if you go that route. But if you're doing it yourself and this just becomes too much, then what you'll have to do is you'll have to wait until your S corp tax return is due, and that's due on March 15th of every year. And what you'll need to do is when you file that return, you'll need to check mark the box that says final return. And that indicates to the IRS to recognize that as the last tax return that the S Corp is going to file. And then you'll want to send in a statement that explains, that you'd like to end the S Corp election, why you're ending the S Corp election, kind of the whole shebang. And it might be a good idea when you do it to go online, maybe get some templates on how to do this and how other people have done this. Um, so, so yeah, that's how you end the S Corp election if you regret it. Okay, I think I have time for one more question here. Oh, how does the Augusta rule affect S corps? So essentially, this is the Augusta rule. Is when it's a provision in the tax code that allows you to rent out your own residence, or not necessarily your own residence, but maybe like some sort of event place or something, and have an event for your business and write off the rent that you pay. And sometimes it can even be to yourself, like if you own this event place or if you own this residence, whatever. And it's a way for you to write off money, but it's also not taxable to yourself. just be careful about it because it has extremely specific rules, extremely specific sort of things that you've got to do when you kind of conduct the Augusta rule. So just keep that in mind. And that is all the time that I have today. I've actually got to go and prepare with conversation with a prospective collective member. But if you found this conversation useful, or if you think that collective might be a good fit for you, or you think that an S corp is a good next step, then schedule a call with us. You'll be able to speak with an advisor and see if an S corp is a good idea. If collective would be a good fit for you, and even if it isn't, we'll point you in the right direction. But go to our website, send us a message on social media. We're always there to respond.